Imagine being 25 and having the financial freedom to travel, invest, and live life on your own terms. Millennials and Gen Z face unique challenges: student debt, high living costs, and unstable markets. But they also have unprecedented tools to build wealth. Today, we'll explore how to turn these challenges into opportunities. 1. Why wealth building matters early. Building wealth isn't just about having money, it's about freedom, security, and choice. The earlier you start, the more time your money has to grow. For millennials and Gen Z, the stakes are higher. Student loans, rising housing prices, and economic uncertainty make waiting costly. Consider this story. Emma started investing $200 a month at 22. By age 40, thanks to compound interest, she could retire comfortably. Her friend Jake waited until 30. Even though he invested double, he ended up with less because time was lost. Starting early allows small, consistent actions to snowball into massive results. It's not about chasing get-rich-quick schemes. It's about building a solid foundation and letting smart decisions compound over years. Wealth building is a marathon, not a sprint. Every dollar saved, invested, or managed wisely today pays off exponentially tomorrow. 2. Understanding your money. Before building wealth, you must understand money, how it flows in and out, where it's going, and how it grows. This starts with budgeting. Millennials and Gen Z are digital first, so apps like Mint, YNAB, and Pocket Guard make tracking spending simple and fun. Debt management is crucial. Credit cards, student loans, and car loans can either help or hurt. Paying off high-interest debt first is a smart strategy, while using credit responsibly builds your financial reputation. Your credit score isn't just a number. It impacts your ability to rent, buy a home, and even get jobs in some cases. Next, understand income streams. Many young adults have multiple sources: jobs, freelancing, side hustles, and investments. Knowing where your money comes from allows you to plan, save, and invest strategically. Story: Alex had a side hustle selling digital art online. By tracking income and reinvesting a portion monthly, he turned $500 into $15,000 within a year. Understanding your money is the first step toward building lasting wealth. 3. Saving versus investing. Saving and investing are often confused, but they serve different purposes. Savings provide safety, a cushion for emergencies or big purchases. Investing grows your money over time through stocks, bonds, real estate, or other assets. Millennials and Gen Z have a powerful advantage: time. Starting to invest in your 20s, even with small amounts, gives you decades for compounding to work. For example, investing $100 monthly in a diversified stock portfolio with a 7% annual return can grow to over $150,000 in 30 years. But don't ignore savings. A proper emergency fund, typically 3 to 6 months of expenses, protects you from unexpected financial shocks. Without it, you might be forced to take high-interest loans, which can derail your wealth-building plans. Story: Mia saved $5,000 as an emergency fund while investing $150 monthly in ETFs. When her laptop broke and her side gigs slowed down, she had a safety net without touching her investments. Balancing saving and investing ensures growth without risk of financial collapse. 4. Smart investing strategies. Investing wisely is key to wealth building. Millennials and Gen Z have access to a range of tools: apps, robo-advisors, ETFs, and fractional shares. 1. Diversification. Don't put all your money into one stock. Spread investments across sectors, assets, and geographies to reduce risk. 2. Dollar cost averaging. Invest a fixed amount regularly, regardless of market conditions. This reduces the impact of volatility. 3. Index funds and ETFs. These provide exposure to the whole market rather than betting on individual stocks. Historically, they offer steady long-term growth. 4. Alternative investments. Consider real estate, crypto, or digital assets cautiously, as they can provide high returns but come with high risk. Story: Liam started with a small investment in an ETF and a tiny fraction of Bitcoin. While Bitcoin was volatile, the ETF grew steadily. Over time, his portfolio balanced itself between risk and stability. The lesson: smart, consistent investing beats chasing hype. Patience, discipline, and knowledge are the true keys to growing wealth. 5. Leveraging technology. Millennials and Gen Z have a unique advantage: technology. Apps like Robinhood, Acorns, and Stash make investing accessible, while budgeting apps simplify tracking and planning. Automation is your friend. Setting up automatic transfers to savings and investment accounts ensures consistency without requiring willpower every month. Robo-advisors can build diversified portfolios based on risk tolerance, making investing easy for beginners. Story: Zoe used an app to automate $50 weekly into a diversified portfolio. She barely noticed it, but after 5 years, her small weekly contributions added up to over $15,000. Technology allows young investors to take advantage of habits and consistency. 2 powerful wealth-building tools. 6. Side hustles and multiple income streams. Relying on a single source of income is risky. Millennials and Gen Z are creating multiple income streams through freelancing, digital content, consulting, or online businesses. Story: Ethan worked a 9-to-5 job and built a small e-commerce store. His side hustle eventually matched his full-time salary, giving him freedom to save aggressively and invest more. Multiple income streams accelerate wealth building because more money can be put to work in investments or savings. Even small side hustles, when consistent, compound over time. Platforms like Fiverr, Etsy, and YouTube allow young adults to monetize skills, hobbies, or passions, turning effort into financial growth. 7. Mindset and financial education. Building wealth isn't just about money, it's about mindset. Millennials and Gen Z need to embrace delayed gratification, disciplined habits, and continuous learning. Financial literacy is key. Understanding how credit, investing, taxes, and debt work prevents costly mistakes. Reading books, following credible finance creators, or taking online courses builds knowledge that pays lifelong dividends. Story: Nina learned about compound interest and started investing $50 a month. While her friends spent on trends, she stayed consistent. By her early 30s, she had a growing portfolio that gave her financial flexibility. Mindset shapes behavior. Discipline today creates freedom tomorrow. 8. Long-term vision and lifestyle design. Wealth building isn't just accumulating money, it's designing the life you want. Financial freedom allows travel, entrepreneurship, or early retirement. Setting goals, short-term, medium-term, and long-term, helps guide your savings, investments, and career choices. Story: Leo wanted to travel the world while working remotely. He created a plan: pay off debt, save for emergencies, invest consistently, and build side hustles. By 28, he achieved a level of financial independence that allowed him to live life on his terms. The key takeaway: wealth building is a mix of financial strategy and intentional lifestyle choices. Money should serve your life goals, not the other way around. Conclusion: Millennials and Gen Z face unique challenges, but also unprecedented opportunities to build wealth. Start early, understand your money, balance saving and investing, leverage technology, and create multiple income streams. Most importantly, develop the mindset of discipline and long-term thinking. The earlier you take control, the greater the advantage time provides. Start today. Small, consistent actions can create extraordinary results over a lifetime.